Joining me for a look at the equity space is Gary Booysen from Rand Swiss. Thank you so much for your time, Gary. Of course, I guess the big thing that markets are digesting still is the comments that came out of the Fed meeting. Of course, expected that the Fed kept interest rates unchanged, but were there any shifts in terms of the comments that came out of Fed Chair Jerome Powell after the meeting?
So yes, I think it was massively priced in that there would be no interest rate move from the Fed, and everything was about the comments. But the volatility that we've seen in the financial markets afterwards has been significant. So yes, we are dealing with a public holiday in South Africa, so maybe looking at the rand dollar pair is not the best way of going about it. But move all the way down to sort of 1860 and then back to around above 19 rand to the dollar today. That is a pretty violent move on the local currency. We're seeing similar things playing out in other markets as well. But if you look at the gold price, the gold price is also, a nice, I suppose, proxy for what's going on with Fed speech. You look at the gold market and you think, if you look at the gold market, it essentially gives you, a kind of currency that can't be printed, that isn't influenced by central bankers. So it gives you a nice almost anchor to something like the US dollar, and that has actually been remarkably stable. So we're sitting at it's been weakening because I suppose there's still the expectation that there are going to be interest rate cuts in the very near future, and gold as a proxy for let's say as a currency proxy doesn't pay an interest rate. So if you're expecting interest rates to come down, you would expect gold to get relatively more attractive. If we look at the current pricing of probabilities on the Fed funds futures out to, let's say, the 31st of July meeting, there's about a 14% chance that we're still going to be standing flat. That's the current pricing in the market. Sorry, at least 14% chance we're going to be flat. The balance of the probabilities are that we are going to see a cut in the Federal Reserve interest rates. So we are still expecting cuts, although it does feel like every time we say that the cuts are coming, they move out by another couple of months.
Indeed, yeah. Now Fed penciling in 3 cuts, so we'll obviously see if those come to pass or not. Let's go into some of the company news that came out of the JSE today. Quite interesting moves that we saw in the telco space, and I'm not sure if the rest of the telcos were lifted by Telkom, because we did see Telkom coming in and saying that there is an agreement now to sell the Mast and Towers business as Swiftnet, but then you had like all these major moves. So Telkom was up 5%, then MTN was up 8%, and then Vodacom with a surge of about 4%. Firstly, let's zoom into Telkom and what this means for them. I was speaking to an analyst earlier on that said that, this cash obviously doesn't mean that it's going to flow immediately into the business. Of course, they need it. But do you think that maybe investors here are forward looking and they are buying into what it will do, even though it won't be an immediate cash injection at this point?
Yeah, I'm a little bit surprised by the moves, and as I said, I think a lot of traders are away today as well. A lot of volume coming out of the market. So to see this kind of exaggerated move on essentially news that I think the market should have been expecting. Telkom has been saying that they're going to sell the Mast and Towers business for a long time. We've had all sorts of deals being put forward around it and not materializing. So to see such an aggressive move on something that you would have been expecting, and then as you say, if you look at MTN stock at the moment, MTN stock up almost 8%. If I look at the terminal feeds at the moment, nothing really to write home about at all. The last kind of meaningful, the red information on the terminal is saying, it's really the release of the Rwanda results on the 18th. So my sense is that this is probably a little bit of an overreaction, given that we're on a lower volume day. Probably a lot of people bridging that gap and taking the public holiday, and maybe we're not getting, great price discovery, and I think it's quite possible that you'll see this reverse on Monday.
Yeah. Gary, something also that was interesting, Transaction Capital coming out and saying that they are selling their Newton Australia business. Of course, we know that out of the portfolio of companies, Newton is one of the ones that are doing well, the debt collection company. So just selling the Australia operations of it. For me, I understand obviously why they do need the money, but at the same time, does this not shrink one of your good businesses at this point in such a tough portfolio?
Well, I think you don't really have a choice if you're transaction capital at this stage with the SA taxi business and what their commitments are. And I think investors are going to be more happy to see that they have the ability to raise the cash and to pay down the debt and to get their group into a better position. So yes, we don't want you don't want to have to sell off your prime assets. But remember, we're going to have the listing of WeBuyCars on the 11th of April as well. And yes, they're not giving up their whole stake, but their stake is going to be significantly reduced as Coronation gets a direct stake in WeBuyCars as the public comes in as well. So it's an unfortunate position to have to be in. But I suppose you kind of look at the history of the business and in hindsight, everything is 2020, of course. And when you were looking at the returns on SA Taxi historically, you were saying, this is a great business. This is a wonderful group to be involved in. And then you kind of look at it in hindsight in a high interest rate environment and you say, lending to the taxi business and interest rates going up, are you really surprised you're not getting paid back and that your impairments have risen? This seems like a business that was quite risky. But in the good times, it's great. But in the bad times, you have to take the punishment. And unfortunately, it's going to result in the selling of the more higher quality assets within the business just to right size it. I think they're going to try and hold on to as much as they can, which is what they have to do. But they need to get the business on a stable footing going forward from a debt point of view.
All right. Well, Gary, let's get to your stock pick for today. What are you choosing?
Oh, it's a good one. I think, I probably wouldn't buy it today, but I mean, we have been picking up MTN stock. Like I said, 8%, it looks great today. And like I said, I probably wouldn't be rushing into MTN at the moment.
Yeah.
Like today, I wouldn't be buying right now, but I think on Monday, if you see an unwind and you see MTN pulling back, let's say 4 or 5%, I think that's an opportunity to get in. It is a speculative business. It's involved in Nigeria, which is always going to be a difficult territory for it. But, why else are you buying it to African and South African stocks? You're looking for the opportunity to participate in one of the most exciting economies and the most exciting continents in terms of demographics, and Nigeria is definitely there. And yes, there's been all sorts of problems, and if it's not fines, it's tax bills, and if it's not tax bills, it's something else. But at the same time, it is an incumbent in that market. I think in the South African business as well, the stock is not particularly expensive. You're looking at a P over the last 12 months of around 7 times. You've got a dividend yield of about 4%. It's a business that is speculative, but given the current underlying pricing, if you're a more speculative investor, picking up some MTNs, at around, call it like 86, 87 Rand, I think you can easily look for a target of kind of north of 120.
All right. Thank you so much for your time and for your analysis today, Gary. Appreciate it. That was Gary Booysen from Rand Swiss.